They told us crypto would never make it into the heart of the financial system. They told us regulation would crush it, that institutions would never trust it, and that the whole experiment would fade out like the dot-com bubble. Yet here we are, watching a new reality unfold in front of our eyes. Two names sit at the center of this reality, and even though most people still underestimate them, their impact is undeniable. XRP and Flare. One provides the rails for value itself. The other provides the connective logic and data that allows that value to become programmable. Together, they are laying the foundation for a system that could quietly become the backbone of the financial world. Before diving deeper, I need to be clear. This is not financial advice. I am not your advisor, and you should never risk money you cannot afford to lose. This is exploration, research, and vision, an attempt to see the bigger picture of what's being built. You are responsible for your own decisions, and you should always do your own research. With that out of the way, let's look at why XRP and Flare are not just surviving the noise of crypto markets, but emerging as pivotal pieces of the next financial order. XRP has always been controversial. It's been called centralized, dismissed as a banker's coin, and written off countless times. Yet despite all the criticism, it remains one of the most liquid digital assets on the planet, with real-world use cases proven in corridors across Asia, Europe, and the Middle East. The XRP ledger was not built for speculation. It was built for one thing: fast, secure, scalable settlement of value across borders. Every year, over $150 trillion flows across borders in an outdated system that still relies on Nostro and Vostro accounts, with banks parking billions of dollars just to keep transactions moving. That's dead capital, locked up, earning nothing. XRP is the answer to that inefficiency. By acting as a neutral bridge asset, it allows money to move instantly without requiring pre-funded accounts. It's a design that institutions understand at a deep level, because they know how devastating friction is when trillions are on the move. But as powerful as XRP is in solving the settlement problem, it doesn't solve everything. The global financial system isn't just about moving money, it's about making money programmable, creating instruments, contracts, hedges, and structured products that can adapt to real-world data in real time. And this is where Flare enters the picture. While XRP is optimized for liquidity and speed, Flare is optimized for connectivity and intelligence. It brings smart contracts and decentralized data feeds not just to itself, but to blockchains that were never designed for it, including XRP. The core of Flare's innovation is the Flare Time Series Oracle, or FTSO. Unlike most oracles that depend on a small group of centralized feeds, the FTSO crowdsources data from a wide set of providers, rewarding accuracy and punishing manipulation. This makes the system trustless and resilient. Data is the lifeblood of decentralized applications, and without accurate, secure data, DeFi collapses. With it, DeFi can scale into something institutions can actually use. Flare isn't just enabling smart contracts, it's enabling smart contracts to interact with the real world in a way that's reliable and scalable. Now here's where things get interesting. Flare and XRP aren't competitors. They're partners in a larger design. XRP handles settlement, Flare handles programmability, and the glue between them is FXRP. At first glance, FXRP looks like just another wrapped asset. But it's not. It's the representation of XRP on the Flare network, secured by collateral inside Flare's system, and it unlocks something that XRP has never truly had before: trustless access to DeFi. For years, XRP holders were locked out of decentralized finance unless they used centralized services or shady third-party wraps. FXRP changes that. It allows XRP to flow into lending, borrowing, staking, liquidity pools, and yield generation, all in a trustless, decentralized environment. The implications are massive. With FXRP, XRP evolves from being a specialized settlement asset into a universal building block. Imagine an institution using XRP not only to settle cross-border payments, but also to collateralize positions, hedge risk, or participate in structured products on Flare. Suddenly, XRP isn't just about payments. It's about programmable liquidity, moving wherever it's needed instantly. This is what makes FXRP so transformative. It binds the speed and liquidity of XRP with the intelligence and programmability of Flare, creating a system where value can move and adapt simultaneously. What's brilliant about this architecture is how clean the separation of roles is. XRP doesn't try to be everything. It does what it's designed for better than anyone else: liquidity, speed, settlement. Flare doesn't try to be the fastest bridge asset. It's designed to be the connective layer, the place where contracts, data, and rules live. Put them together and you have a system greater than the sum of its parts. One moves value, the other makes value programmable. FXRP is the key that finally fuses them. This synergy matters because global finance isn't looking for meme coins or retail hype cycles. It's looking for rails and frameworks that can handle trillions of dollars under strict compliance. XRP and Flare, through FXRP, are among the very few ecosystems capable of meeting that demand. Think about it. The FTSO isn't limited to price feeds. It can provide economic data, commodities prices, interest rates, even ESG metrics. Imagine a smart contract that automatically rebalances a global portfolio based on real-time GDP shifts or carbon output. That's not a fantasy. That's the level of application Flare enables. And with XRP as the settlement layer, you now have a financial operating system that is not only decentralized but also interoperable with the largest pools of liquidity on Earth. This is where most people miss the picture. They see XRP and Flare as two separate projects, but zoom out and they form an interoperable financial fabric. XRP ensures money can move across borders instantly. Flare ensures that money can be made programmable, logical, and responsive to the real world. And FXRP makes sure the two are inseparably connected. The scale of this matters. Because while retail is distracted by the next hype cycle, institutions are preparing for systems they can trust with billions and trillions. XRP and Flare are aligning with that future. Even the psychology of this alignment matters. When ETFs get approved for assets like XRP, the legitimacy signal will spread across the globe. Institutions will feel emboldened to use what they've been testing privately for years. Retail investors will see headlines and flood in. Awareness will drive adoption. Adoption will drive price. And price will bring more awareness. That's the feedback loop of exponential growth. But underneath it all, the technology that actually makes this possible will be the quiet symbiosis of XRP and Flare. Think for a moment about what this combination actually unlocks. For decades, financial institutions have relied on fragmented systems. One set of rails for payments, another set of systems for contracts, another for data. They patch them together through intermediaries, custodians, clearinghouses, and regulators. The result is inefficiency at scale. XRP and Flare collapse those silos. XRP provides a settlement layer that doesn't require nostro accounts or days of waiting. Flare provides the logic layer that doesn't require armies of lawyers to execute. Together, they create a system where money can move, be programmed, and be audited in real time. The brilliance of FXRP is that it finally removes the need to choose between liquidity and programmability. Before FXRP, XRP could move money quickly, but it wasn't programmable without centralized bridges. On the other side, Flare had programmability, but it needed liquidity to make it meaningful. FXRP resolves that by taking native XRP and making it a first-class citizen on Flare. It is collateralized, trustless, and secured within Flare's system. That's not just wrapping, that's integration at the design level, and it means the liquidity of XRP can now be pointed anywhere that programmable money can go. This has profound consequences for how institutions will engage with digital assets. Take derivatives as an example. Today, derivatives markets run in the hundreds of trillions of dollars. They are managed through complex contracts and clearinghouses that add cost and risk. With FXRP, an institution could construct derivatives natively on Flare, secured by XRP liquidity, with execution and settlement happening instantly. The risk of counterparty default drops dramatically because settlement isn't delayed. This is not theoretical. It's the logical evolution of combining a high-speed settlement layer with a decentralized contract layer. The FTSO makes this even stronger. Consider the role of oracles in derivatives markets. Without accurate data, derivatives fail. Prices slip, margins break, and contracts collapse. The FTSO feeds accurate, crowdsourced data directly into Flare, ensuring that the contracts running on FXRP are grounded in reality. Suddenly, the building blocks are in place for not just DeFi, as retail knows it, yield farms and meme-driven pools, but for institutional DeFi, structured products, hedging tools, automated instruments that actually align with how banks, funds, and treasuries manage money. That's what Flare plus XRP enables. It's also important to recognize the strategic separation between the two. XRP doesn't try to be a smart contract platform. It doesn't bloat its ledger with unnecessary complexity. It stays lean, optimized for one thing: liquidity and speed. That's why it's so resilient. Flare doesn't try to be a global settlement rail on its own. It focuses on providing data, programmability, and interoperability. By separating the roles cleanly, each can specialize and excel. And FXRP ties them into one ecosystem, where their strengths reinforce each other, rather than compete. This is the kind of architecture institutions actually look for. They don't want one chain trying to do everything and failing under scale. They want modularity. They want layers that are optimized for specific tasks. They want systems that can be audited, proven, and scaled. XRP and Flare provide exactly that. And it's why their partnership, whether formalized or implicit, is so powerful. Think about payments specifically. Today, cross-border transactions often take days, with banks forced to park billions of dollars in Nostro accounts around the world. That capital sits idle. XRP eliminates the need for that by allowing instant settlement through on-demand liquidity. But now layer in Flare. With Flare, those same payments can be tied to conditional logic. Imagine a global trade contract where payment is only released once shipping data confirms arrival, or once customs data confirms clearance. With Flare's Oracle system, those conditions can be verified in real time. The payment settles instantly on XRP rails the moment conditions are met. That's programmable global trade without intermediaries. This is where people underestimate the impact of FXRP. They think it's just about letting XRP holders earn yield. But the deeper truth is that it's about binding XRP liquidity into a programmable framework. It's about enabling institutional-grade use cases that go far beyond speculation. Lending desks, trade finance, supply chain contracts, insurance payouts triggered by real-time weather data. All of it becomes possible when XRP liquidity can move seamlessly into Flare's programmable layer. Let's drill into the psychology of adoption here. Institutions don't move quickly. They test, they pilot, they audit, and they wait for the right conditions. Ripple has already been piloting XRP with financial institutions for years. Flare, meanwhile, has been quietly building its Oracle network and demonstrating that it can deliver reliable, decentralized data. The launch of FXRP is the bridge that takes those pilots into production. Once an institution realizes that they can use XRP for settlement and Flare for programmability in a single seamless system, the risk of adopting digital assets drops dramatically. It's not a fragmented experiment anymore. It's an integrated framework. The timing couldn't be better. Global markets are shifting toward tokenization. BlackRock, Fidelity, and others are already rolling out tokenized funds and securities. The World Economic Forum has projected trillions in tokenized assets by the end of the decade. For tokenization to work at scale, you need two things: reliable settlement and programmable logic. That's XRP and Flare. Settlement rails plus data-driven contracts. FXRP makes it possible for tokenized assets to interact with global liquidity in real time. That's the missing link. We can also think about the role of retail in this picture. For years, XRP holders felt sidelined. They watched as Ethereum and other chains built DeFi ecosystems, while XRP remained limited to its settlement role. FXRP changes that narrative entirely. It gives XRP holders the ability to participate in DeFi without leaving the XRP ecosystem. They can collateralize, stake, lend, and earn yield, all backed by the liquidity and speed of XRP itself. This is not just about giving retail more options. It's about aligning retail and institutional use cases under one umbrella. Both get what they need, and both strengthen the ecosystem. The feedback loop this creates is profound. Institutions bring legitimacy and deep liquidity. Retail brings energy, adoption, and community. FXRP binds them together under the umbrella of Flare's programmability and XRP's settlement power. As that loop tightens, liquidity deepens. As liquidity deepens, volatility becomes more manageable. And as volatility becomes manageable, institutions feel safer to allocate more. That's how an asset transitions from speculative to systemic. Here's another angle most people aren't discussing: interoperability. Flare is not just enabling XRP to be used on Flare, it's enabling multiple blockchains to tap into the same oracle and data systems. That means XRP, through FXRP, doesn't just get access to Flare's native ecosystem. It gets access to a multi-chain environment where assets can flow across ecosystems without friction. This is critical because the future of finance will not be a winner-takes-all chain. It will be a network of networks. XRP plus Flare positions itself as the settlement and logic layer for that network of networks. If you zoom out, the picture is staggering. XRP solves settlement. Flare solves programmability. FXRP binds them into one trustless system. The FTSO ensures that the data flowing through that system is accurate and resilient. Together, they provide the infrastructure for tokenized assets, DeFi, cross-border payments, and programmable global trade. It's not hype. It's not theory. It's the quiet assembly of the financial operating system of the future. And yet, most people are still sleeping on it. Retail traders chase meme coins and miss the deeper picture. Analysts dismiss XRP because they don't understand its institutional focus. DeFi maximalists ignore Flare because it doesn't fit their narrative of monolithic chains. But while the noise dominates headlines, XRP and Flare are quietly building the rails that could carry trillions. This is what makes being early so powerful. By the time the mainstream wakes up, the infrastructure will already be in place. When you look at how technologies take root, there's always a phase where they feel irrelevant right before they become indispensable. The internet in the early 90s felt clunky and limited. Smartphones in the early 2000s felt like toys compared to desktops. In both cases, the infrastructure was quietly being built in the background. Fiber optic cables for the internet, app stores, and mobile chips for smartphones. XRP and Flare are in that same phase right now. To the casual observer, they look like niche blockchain projects. To anyone paying close attention, they are the backbone being laid for the next financial era. The FXRP mechanism itself deserves closer inspection because it's not just another wrapped token model. In most wrapped systems, you send your asset to a custodian, and they mint a wrapped version on another chain. That introduces risk. The custodian could fail, get hacked, or simply refuse redemption. FXRP avoids this by creating a decentralized model where collateral providers on Flare back the wrapped XRP with F assets. This collateralization ensures that wrapped XRP is always redeemable, and it doesn't rely on a single custodian. That's why FXRP is more than a gimmick. It's a trustless bridge that expands XRP's utility without compromising its integrity. Imagine how that changes perception at the institutional level. Custody risk has always been one of the biggest barriers to digital asset adoption. Banks and funds don't want to trust a single custodian that might default. FXRP provides a decentralized custody solution baked into the system itself. That's a game changer. Institutions can now hold exposure to XRP in programmable environments without worrying about counterparty failures. The risk profile shifts dramatically, and with it, the willingness to allocate increases. Now let's expand into what this means for yield and capital markets. Right now, yield in traditional finance is shrinking. Government bonds pay little. Bank deposits are stagnant. But on-chain, yield opportunities are abundant. The challenge has been that most yield opportunities are tied to unstable ecosystems, where security is questionable and liquidity is shallow. FXRP creates yield opportunities backed by the speed and liquidity of XRP itself, amplified by the programmability of Flare. That's not just another farm. That's a structural opportunity for both retail and institutions to earn on an asset that already has systemic use cases. This also reframes the psychology of XRP holders. For years, many held XRP purely as a speculative bet on future adoption. They waited through lawsuits, bear markets, and endless skepticism. FXRP gives them a way to deploy their assets productively while they wait. Instead of idle tokens sitting in wallets, XRP can now be collateralized, wrapped, and deployed into ecosystems that generate real returns. That's how long-term holders become liquidity providers. And the more liquidity they provide, the stronger the ecosystem grows. It's a virtuous cycle. But we can't underestimate the role of Flare's oracles here. Without reliable data, none of this works. The Flare Time Series Oracle is one of the most underappreciated innovations in the space. Instead of relying on a handful of nodes or centralized feeds, it crowdsources data from a decentralized network of providers, incentivized to stay accurate. This isn't just about crypto prices. It can include FX rates, commodities, equities, and even non-financial data like weather or shipping times. Once that data is on-chain, contracts can reference it, and FXRP-backed instruments can be designed around it. That's what unlocks real-world utility. Think of a simple example. Agricultural finance. A farmer in Brazil takes out a loan denominated in local currency, but tied to the price of soybeans on global markets. Normally, that requires complex intermediaries. With FXRP and Flare, that loan can be coded as a smart contract that automatically adjusts repayments based on live soybean price feeds. Settlement happens instantly on XRP rails. Risk is reduced for both the farmer and the lender. That's not science fiction. It's programmable finance grounded in real-world data. Now let's pivot to global macro forces. The world is entering a period of extraordinary financial stress. Debt levels are at all-time highs. Inflation is volatile. Currencies are under pressure. Against this backdrop, institutions are looking for alternatives, assets and systems that are neutral, efficient, and reliable. XRP provides neutrality and efficiency in settlement. Flare provides programmability and transparency in contracts. Together, they offer a framework for navigating financial uncertainty. This is why their role is so much bigger than just another crypto. They are infrastructure in a time of systemic fragility. FXRP also enables cross-chain composability in a way that goes beyond technical novelty. By bringing XRP liquidity into Flare, it can interact with Ethereum, Bitcoin, and other assets via Flare's interoperability protocols. This creates a hub-and-spoke model where XRP doesn't just settle payments, it becomes the liquidity foundation for multi-chain applications. In a world where liquidity is fragmented across dozens of blockchains, that consolidation is invaluable. It reduces friction, increases efficiency, and positions XRP at the center of a multi-chain financial web. It's worth addressing the skepticism too. Some argue that these systems are too complex, that institutions will never trust decentralized mechanisms, or that traditional rails will adapt before crypto gains a foothold. But history says otherwise. Complexity fades as systems mature. The internet was once dismissed as too complicated for commerce. Today, it's invisible infrastructure. Trust issues fade as track records are built. XRP has been operating for over a decade with no hacks at the protocol level. Flare is designed with resilience in mind. And traditional rails? They move slowly. Swift has been trying to modernize for decades and still struggles with delays and costs. By the time traditional systems adapt, decentralized alternatives will already be entrenched. The most overlooked piece here is how quietly this is happening. There are no flashy headlines every day about FXRP. It doesn't dominate the news cycle like Bitcoin or Ethereum. But behind the scenes, it's creating the conditions for a structural shift. That's how real revolutions always happen. They build quietly, unnoticed, until one day, they're everywhere. By the time the average investor realizes what's happening, the value will have already repriced to reflect it. That's why being early and being informed matters so much. We also need to talk about community, because in blockchain, community is not a side effect, it's a core feature. XRP has one of the most resilient communities in crypto. They've endured regulatory battles, endless skepticism, and years of suppression. Flare, meanwhile, has cultivated a community of builders and data providers. FXRP unites these communities under a shared mission to expand utility and liquidity. That unification matters because it creates an unstoppable base of support. Institutions bring capital, but communities bring conviction. Together, they create ecosystems that endure market cycles. And finally, let's zoom out to the philosophical level. Money is not just a medium of exchange. It's a system of trust, contracts, and settlement. For centuries, that system has been controlled by central banks, governments, and intermediaries. XRP and Flare represent a decentralization of that system. Not chaos, but ordered decentralization, where efficiency and transparency replace opacity and friction. That's why their convergence is so important. It's not just about making payments faster or contracts smarter, it's about redesigning the very infrastructure of global trust. What we've uncovered today is that XRP and Flare are not just two separate projects moving along their own tracks. They're two forces converging to reshape the financial landscape. XRP provides the settlement layer, the neutral high-speed bridge for global money movement. Flare adds intelligence, the programmability, the data access, the interoperability that unlocks use cases beyond simple payments. And FXRP is the key that connects them, allowing XRP to flow into smart contracts securely, trustlessly, and at scale. That's not just incremental innovation, that's systemic change. It means XRP isn't limited to being just payments, and Flare isn't limited to being just another smart contract chain. Together, they create something neither could accomplish alone: the foundation for decentralized finance that institutions can actually use. When you realize that, you start to see why this moment matters so much. Because the truth is, the financial system is already shifting. Central banks are testing digital currencies. Institutions are tokenizing trillions in real-world assets. Global liquidity is searching for faster, cheaper, more reliable rails. The legacy systems, slow, expensive, and siloed, are breaking down under the weight of modern demands. And in the middle of that, XRP and Flare are offering an alternative that is faster, leaner, and more adaptable than anything else on the table. For the average investor, the challenge is timing. By the time the headlines scream, XRP is everywhere, or Flare is powering tokenized assets, it'll be too late to position early. That's why understanding the mechanics now, how supply works, how FXRP changes custody, how institutions will interact with this technology, is the difference between chasing the move and preparing for it. So here's the real takeaway. XRP is the engine, Flare is the ignition system, and FXRP is the key that starts the car. Together, they're not just part of the next financial cycle, they're shaping what the next financial system looks like. And if you walk away from this video with one question lingering in your mind, let it be this: what does it mean when settlement becomes instant, contracts become programmable, and custody becomes decentralized? Because once that shift takes root, nothing about money, banking, or investing will look the same again. We may not know the exact day or hour the dam breaks, but the structure is already in place. The future doesn't arrive with a drum roll. It builds quietly until suddenly it's everywhere. XRP and Flare are building that future right now. And the question is whether you'll just watch it unfold, or whether you'll recognize it in advance and be ready to act. Like, comment, and subscribe for more.